Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Thursday, February 17th at about 2 p.m. here in Northern California. This video today I want to talk to you about why I'm still bullish. Now I know I've been talking about the fact that the volume is going down, and because we're seeing this decrease in volume, even during this increase in price, we've been seeing a decrease in volume. And now it looks like we've started our next bearish candle, just as I suspected. I'm suspecting at least one more flush before the market turns around. And that flush could take us down to this line, or even, no, I think that could be the bottom. It's just kind of revisiting, just kind of completing the W at that line there. And then we take off from there. I mean, the market would just make a W and move on. I see that as a distinct possibility, a strong possibility, but in the long run, I am bullish. And so this pullback would be a short-term pullback. I think what's happening right now is a markup, and I think there's going to be a flush. The markup could even go as high as $50,000, or even to the top of this band at $52,000 before it flushes again. I would not be surprised. So even if we hit $52,000, I would not feel like we're out of the woods yet until we close a candle above this whole suite indicator. For me, that's an indication that I was wrong, that the market is not going to do that again. But this is short term. Even though I do expect the market to flush again, this is going to be a short-term move. Long term, we're still bullish, and let me show you why. So I got this chart from cryptopotato.com. I don't know if you can see. You can't see. I was trying to show the URL, cryptopotato.com. It's explaining the differences between divergences. You need to take a screenshot of this chart, and you need to memorize it. Now, I said we were looking at hidden bullish divergence in the chart. I was saying that in every video for a while, and somebody unsubscribed from my channel because they said I got that wrong. They said it was bearish divergence. Wrong. Bearish divergence looks at highs. So the blue line in this chart represents the price. The red line represents the RSI. So if the blue line we're making higher highs and the red line we're making lower highs, that is bearish divergence, okay? And going to the Bitcoin chart, this is exactly what we saw over here. From here, if you look at this, from January 4th, right here, all the way to April 12th, the market was going up, okay? We were seeing an increase in price. From this high to this high is a higher high. Clearly a higher high, right? But in the RSI, the corresponding high here to the corresponding high basically here, clearly we're making lower highs in the RSI. So lower highs in the RSI, higher highs in the price. What is that? Lower highs in the RSI, higher highs in the price. That is bearish divergence. However, here we're making lower lows in the RSI. From this low to this low is a lower low, while simultaneously making higher lows in the price. From this low to this low is a higher low. Now, what happens when you're making lower lows in the RSI but higher lows in the price? That's called hidden bullish divergence. Hidden bullish divergence. Divergence simply means that they're moving in different directions. The price is moving in one direction, the RSI is moving in a different direction. And whenever you see a divergence between the price and the RSI, it signifies that something's getting ready to happen. Basically, we're getting ready to see a reversal. All right. Now, this is hidden bullish divergence, which means the market is bullish. Now, is it taking a while for that hidden bullish divergence to play out? Yes, it's absolutely taking a while. These things on the weekly chart, they don't happen in a week. They don't happen in a month. For instance, the market was telegraphing that Bitcoin was getting ready to top out between January 4th and April 12th. So that's more than 3 full months. January, February, March, and then 2 weeks of April. So you're talking about 3.5 months before, and really the fall didn't come until May 10th. So it hit the top, but then it hovered around there until May 10th. So you were actually talking about 4 full months, 4 months and a week and a half, 4 months and 2 weeks basically, before this actually played out. But it was as clear as day that the RSI was telling a different story than the price. And people who were saying it was going to, break $100,000 right then, they just weren't looking at the RSI. Well, it's the same thing here. The RSI and the price, the divergence, the hidden bullish divergence, is telling a very clear story that even if we get a momentary pullback, even if it comes all the way down to $28,000, it's going to break out bullish. I fully expect that. And in the meantime, I'm looking at a number of assets. The first one of the assets I'm looking at is sand, and I've been watching this for a while. I don't even remember what the date it was, but it had not broken down yet. I think it was over here in December when I made this note. And I said, let me just erase that. In December, I said the RSI topped out on the weekly chart on November 22nd. That's here, right? Now we're making lower lows. Indicates the high is probably in for sand, although we may get one more pump. Accumulation range, $3.14 or below. So it had gone all the way up to $8.35, and it was hovering over here in the $5, $6 range. And I said, I put this, $3.14 is the accumulation range for me. I will not buy it above $3.14. Sure enough, it came down and sat on that line right there. It wicked beneath it, but that line that I drew was the line of support. Did I buy it? No. I just wasn't watching, wasn't ready. But if we get another dump like I expect, then sand is going to break down and touch this line, maybe even break beneath this line and come down to its bottom here one more time. And if that's the case, I intend to buy myself some sand. I had the same scenario, or very similar scenario, with Solana. If you see my videos from the past, I drew this accumulation range here long before we ever entered into it. Why? Because I saw that the RSI topped out in April. We never broke above that high in September, and the RSI has continued to trend downward. So when we were over here, and then I drew this as the top, as the tippy top, 301, when we were back here somewhere. But I knew there was no way we were breaking above $301. There's just absolutely no way. And so my sweet spot for buying it was $94.11. This dotted line here in the midst of this accumulation range is my buying sweet spot. And that would have been where I bought it. Did I buy it? No. But if it breaks beneath this, and honestly, $85.94 is my sweet spot. $94 is where it is right now. But I expect one more dump. It should break beneath this line one more time. Honestly, I wouldn't mind buying it at $94, but I prefer to buy it at $85 or below. But it was just simple mathematics that, number one, when you see that divergence, and then number two, a 66% pullback is just normal. And then my bottom range here of the range here was 76%. And so, yeah, solid buy-in opportunities for these. I'll look at one more. Actually, I'll look at two more. I'll look at Matic, and then I'll look at Zilliqa. Oops, I'm late for a meeting. I got to go. One of my platinum subscribers, I'm late to his meeting. I'll jump right in. Actually, I'm not going to talk about Matic. I'll just give an update on Zilliqa. This, and I'm giving you this for free. This is what all of my patrons get, especially at the gold level. At the gold level, you get links to every single one of my charts, and that which is more than just the cryptogenic portfolio, but you could also request other charts, and I'll do those charts, and you'll have 24-hour access to those charts. Here is my Zilliqa chart, and I'm just going to show you what could happen if we get another breakout like this. It's intense, but let's say we hit the bottom of this line, it could take us all the way up to $4.75. So if we come up to retouch this line again, that simply means that the next wave will be bigger than the previous wave, which I think is honestly very likely, because when you study Elliott wave theory, where is it? When you study Elliott wave theory, yeah, it's a 5-wave cycle. So you've got A, or 1, 2, 3, and 3, wave 3 is always the biggest wave. So you think wave 1 is big, wave 3 is typically bigger. And then you have basically I'm not getting this exactly right, but you get basically, yeah, something like that. Something like that. I'm not getting it exactly right. Now, don't quote me on any of these numbers, but the concept is wave 3 is always the biggest wave, or typically it is the biggest wave. And so I'm expecting a bigger wave, and this goes for a lot of these assets. You know, we look at Theta token. If wave 3 is bigger than wave 1, I mean, you know, well, we won't get into it. I've got to go to my meeting. But listen, this is not financial advice. I'm not a financial advisor. This is just my opinion. This is just what I see. But if you find it useful, do me a favor and hit that like button, subscribe to this channel, hit that bell. But above all, make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic signing out.